Drive through some of Georgia's newest neighborhoods right now, and you'll notice something strange. The houses are brand new. The lawns are perfect. And the signs out front don't say sold. They say price reduced. Again and again. For years, Georgia was one of the hottest housing markets in the country. Builders couldn't put up homes fast enough. Buyers were lining up, sometimes bidding over asking price just to secure a lot in a subdivision that wasn't even finished yet. But something has shifted. Behind the fresh paint, behind the staged model homes, a quieter story is unfolding. Builders are sitting on more inventory than they know what to do with. In some developments, active listings have nearly doubled over the past year. Instead of waiting it out, many of them are doing something drastic. They're cutting prices. They're throwing in free upgrades. They're paying down mortgage rates just to get a signature on paper. Today we're counting down 10 Georgia suburbs where this is happening the most. Each one tells a slightly different version of the same warning. So stick around, because the picture gets more dramatic as we go. So how did we get here? After the pandemic, Georgia saw one of the biggest housing booms in its history. People moved in from all over the country, drawn by lower costs of living, new job hubs, a lifestyle that felt just out of reach in bigger, more expensive cities. Home builders responded the only way they knew how. They built and built and built, but mortgage rates climbed higher than most buyers expected, and suddenly the math stopped working for a lot of families. Demand slowed down just as thousands of new homes were hitting the market at the same time. In several counties, months of supply has climbed well past what's considered a balanced market. Now developers are left holding inventory they can't move fast enough. And every month that a house sits empty, it costs them money. That's the pressure driving everything you're about to hear. Let's start the countdown. Number 10 is McDonough. And this one starts with logistics. Over the past decade, McDonough has turned into a major distribution hub. Warehouses, fulfillment centers, popping up along the interstate corridor almost as fast as the neighborhoods built to house their workers. That logistics boom pulled in thousands of new residents. Builders responded with entire subdivisions designed for exactly that workforce. Drive through one of those newer developments today, though, and you'll notice rows of finished homes, freshly planted trees, empty driveways, multiple move-in ready signs sitting side by side. Inventory has been climbing steadily here. Sales teams are now leaning on incentives just to keep the momentum going. At this stage, builders are only beginning to feel the pressure, but the signs are already impossible to ignore. The lesson from McDonough is simple. Rapid growth tied to a single industry can quickly turn into oversupply the moment that industry slows down. From there, we head to Covington, sometimes nicknamed the Hollywood of the South, thanks to the film and television productions that have used it as a backdrop for years. That reputation brought attention, tourism, and eventually a wave of new construction as developers bet on Covington becoming the next big relocation destination. Expansion followed fast. Entire streets of new builds appearing seemingly overnight, but the pace of construction outran the pace of actual buyers. Now there are more finished homes than there are families ready to move into them. Price cuts have appeared across multiple developments here. A clear sign that the confidence from a few years ago has cooled off considerably. Building ahead of demand always creates pressure eventually, and Covington is feeling that pressure right now, even with its Hollywood shine still intact. Further southwest, the story shifts to something more painful for everyday buyers. And that brings us to Dallas, Georgia. Not the one in Texas. This one sits northwest of Atlanta, and it built its reputation on affordability. For years, that was the entire pitch. A smaller price tag with easy access to the metro area. But affordability only works as a selling point until prices climb too high for the same buyers it once attracted. And that's exactly what happened here. Demand has slowed noticeably. Construction companies are now offering closing cost assistance and mortgage rate buydowns worth thousands of dollars just to keep deals alive. When affordable stops feeling affordable, buyers pull back fast, and developers have to scramble to adjust before the damage spreads further. But the situation becomes even more dramatic once you head east, into Loganville. This suburb grew almost entirely on the promise of family living. New subdivisions marketed around top-rated schools and quiet cul-de-sacs. That promise pulled in buyers by the thousands, but a growing number of finished homes are now sitting unsold for far longer than builders expected. Days on market have crept upward, That's forced developers into more aggressive strategies just to move product, including upgraded finishes offered at no extra charge. When supply starts outrunning buyers, even in the most family-friendly markets, the response is almost always the same: cut prices, and hope demand catches up. And this is where things really begin to change, because Hoschton takes the story upscale. This suburb leaned hard into large master-planned communities, targeting a more affluent segment of buyers with resort-style amenities and sprawling floor plans. But upscale buyers tend to be more cautious, especially when interest rates are working against them, and luxury expansion sounds great on paper, until it meets a very different reality once the market shifts underneath it. Incentives here have grown noticeably larger, from covering closing costs entirely to throwing in high-end finishes that would normally cost tens of thousands of dollars. Price reductions, once rare in a market like this, are now becoming common. And that alone tells you how much things have changed. Moving further north, the story takes on a medical and lifestyle angle in Braselton, home to Chateau Elan, and a rapidly expanding medical corridor built around Northeast Georgia Medical Center. That combination of healthcare jobs and resort-style living made Braselton one of the fastest-growing markets in the entire state. That growth attracted an enormous wave of new construction. But eventually, even the fastest-growing markets can hit a ceiling. Excess supply has become a real issue here. Builders are now competing directly with each other inside the same handful of neighborhoods, which naturally pushes prices down as everyone tries to stand out from the development right next door. At this point on the list, multiple builders are competing head-to-head just to survive, and that competition only gets more intense from here. Heading back south, Locust Grove tells one of the more visually striking stories on this list. Its position along a major interstate turned it into a magnet for both logistics growth and residential expansion at the same time. Entire new communities here are still searching for buyers. Rows of finished homes sitting empty for months, some with for sale signs so faded they've clearly been standing since last year. Builders have started lowering their profit margins just to keep sales moving, stacking incentive on top of incentive to attract attention in a market that simply isn't responding the way it used to. When you see whole streets of new homes without a single moving truck in sight, that tells you everything you need to know about where this suburb currently stands. Number 2 takes us to Buford, a suburb long defined by one of the most sought-after school districts in the state. That reputation alone used to be enough to sell a house before it was even finished. But premium pricing has finally run into buyer resistance, as mortgage rates make even a top-tier school district feel out of reach for plenty of families. Sales teams who once had the upper hand in negotiations are now the ones making concessions. In some developments here, entire communities are struggling to sell more than a handful of homes per month. That shift would have seemed unthinkable just a couple of years ago. And that brings us to number 1, Fayetteville, where things reach their most extreme point on this entire list. Fayetteville built its recent identity around film and television production, home to major studio campuses that turned it into one of the fastest-growing suburbs south of Atlanta. That growth attracted an unusually high number of builders, all developing in close proximity to each other, all fighting for the same shrinking pool of buyers. The result has been steep price reductions, aggressive mortgage rate buy-downs, free upgrades stacked one on top of another just to win a single sale. In some Fayetteville developments, builders are reportedly offering upwards of $20,000 in incentives on a single home, an amount that would have been almost unheard of here just a few years ago. At this stage, builders appear willing to sacrifice real profit just to move inventory off their books. And that alone tells you how far this market has shifted. Even areas that seemed untouchable a few years ago are proving that no suburb is immune to a shift like this. And Fayetteville stands as the clearest example of just how fast things can change. So what does all of this actually mean? It doesn't mean Georgia's housing market is collapsing. What it means is that the market has entered a new phase, one where builders can no longer assume buyers will show up no matter the price or the location. They're adjusting in real time, cutting costs, offering incentives, releasing inventory faster than before. For buyers, this shift could open up real opportunities that simply didn't exist a couple of years ago. For investors, it's a signal worth watching closely, because patterns like this rarely stay contained to just a handful of suburbs. Which Georgia suburb do you think could be next? Let us know in the comments, and if you enjoy data-driven real estate investigations like this one, make sure to subscribe, because the housing market is changing faster than most people realize.